Hey, welcome to the Stock Market Starters YouTube channel. Today we are back looking at more fundamental stock market investment analysis and looking at KHC or Kraft Heinz today. So let me share my screen. You guys can see what's going on here and we'll look at it. So first off, we're looking at 1 year of price action, right? Looking at the technical analysis. We see it's been a lot of variability, moving up pretty well here the last few days. If we go out, from here, from our tight view, go to a 3-year weekly, we get a little bit more information. We can see, right, we're in a sort of a longer term downtrend that's going down a little bit here. We also have a bit of a horizontal area that we have kind of stalled on here, right? Not dropping really below this last low here, and coming up into where the weekly resistance might be. Now, this was kind of more interesting to me looking back in here, looking at what the downside might be on this, right? If we could catch it at the bottom and kind of write it up. Nevertheless, I want to take a look at what this might look like from a fundamentals perspective, and we can kind of see if it's maybe worth buying into. So, knowing the technicals, it's set to drop a little bit most likely. It does, however, pay this 40-cent dividend, so that's pretty cool. But important to keep an eye on these trends, especially as we're in investments and looking at when to get in, when to get out, that sort of thing. So let's go ahead and hop on in and see what we're looking at. So first up, we're looking at KHC, so we can look it up, right? Perfect, KHC. And here we are. So we've got all of this information, just like on our last investment analysis on Ford. We can look into some of this. Here is my chart, right? So we know what we want to look for. We're looking at Kraft Heinz Company KHC, right? Oops. And throw another parenthesis on the end of that. Make that the right size and perfect. So, right, that's kind of what we're looking at there. We can pop this, well, I'll pull it down a little bit. But, KHC, this is the one we're looking at right now. So first thing we want to know is market cap and EV. So we're going to find, hey, market cap intraday right here, 43.763 billion, right? 43.763 billion. And hey, that's fun. I think I just had an order fill on my trade that I was in. But yep, there it goes. Sold a couple of shares at a profit. That's cool. Anyway, looking at next, we want EV, enterprise value. Now, enterprise value isn't here. If I remember right, enterprise value is down here under statistics. Looking at as of yesterday, right? Or I guess this would have been Friday, 8/23. We're looking at enterprise value, and we've got 62.45 billion. So 62.45 billion. So I kind of want to go through all these and then we'll kind of talk about them. But right, market cap and EV, both looking at what's the overall value of the company, right? Market cap, basically at the current share price, what's the company worth? You'll notice it's actually very, very similar to Ford, right? So that's kind of cool, right? 42.8 versus 43.7 billion. Now, of course, that is still a $1 billion difference. But, pretty close as far as they go. EV, very different on Ford versus on Kraft Heinz, which is interesting. That tells me that, Kraft Heinz might have a little less value when you consider debts and cash on hand, right? Next, we want beta. And beta, I believe, is going to be up here. Beta, 5-year monthly, 0.52. So beta is a 0.52. So that tells us that, it's a lot less correlated to the overall market than Ford was. Next, we can look at our PE ratio, right? PE ratio, trailing 12 months. That's perfect. So we got 23.2, 23.20. So, right, that tells us that's, you're paying about $23.20 for each dollar of earnings for KHC. So, quite a bit higher, a little more than double what you pay per dollar of earnings for Ford, which is kind of interesting to see, right? And you guys, hopefully you can see how these become pretty comparative looking across the different ones. Yeah, kind of interesting to see that. All right, PEG ratio, if I remember right, PEG ratio is down here. Yep, PEG ratio, 5-year expected is 0.97, so 0.97. So again, including the future growth, it's saying it's, it's just under 1, but we're, using just that ratio, we would basically say, you're paying 97 cents for a dollar of growth in earnings in the next 5 years. So kind of interesting. But again, not quite as nice as Ford. Next up, we got EPS, earnings per share. Now, EPS should be up here, trailing 12 months. Perfect. So $1.56, right? 1.56. Now, that's interesting because that means that we're earning more per share than Ford, right? Higher earnings per share, which is interesting. Dividend yield, that's our next one. Dividend yield on KHC, Ford, and dividend yield, $1.60. And this is showing a 4.46% dividend yield according to today's price. 4.46%. And of course, we can again make this a percent. 4.46. And we can make it look nice and all that good stuff. But that's kind of interesting to see. Okay. So dividend yield a little lower. Next up, EBITDA, right? Where is EBITDA? I believe EBITDA is financials. And if you guys remember, this is the spot where we're looking at the actual income statement, and then we go down to find EBITDA down here, and we look at trailing 12 months, and we can just copy this 4 million, right? And all this good stuff. And then, this is in thousands, right? So we can do this times 1,000 equals, and the reason we do that, if you guys remember, is, right, all numbers in thousands. So that means the actual EBITDA is 1,000 times what it shows, right? So that tells us it is 9 billion. So this one is again, lower earnings before those key, but it's 4.693 billion. 693 billion. And then of course it looks funny, but we can fix that, make it look right, and that's not a problem. But right, make it look normal. Then we're looking at revenues, right? So we want to see, okay, what's the revenues, and then we're going to graph it as a trend like this and kind of get an overall picture of what we're looking at here, and then make a decision if we want to actually buy or not. So earnings are again under the income statement, right? So we're looking at revenue, or yeah, not earnings, revenue. So 2020 revenue is what we want to start with. So we can just copy that, paste it, right? And then we can match destination. And then 2021, it'll be the same deal, right? So we'll just pull these numbers from Yahoo Finance and see, what it ends up looking like. Right? But it's kind of interesting how you can just take this data and say, hey, look, we've got some information, and we can go and find out what we think of this stock based on the information that we've got, and and see kind of if we can get an overall picture of the company here and decide whether or not we want to actually buy it. And then what's cool is looking at Ford. Last week we were not able as much to compare. But looking this week, we'll be able to compare better, which is fantastic. So, right, all right, we've got our revenues, or our revenues. So, right, we can see revenues again, actually quite a bit lower than Ford here, right? Ford has a lot higher revenues, a lot higher earnings before interest, taxes, depreciation, and amortization, right? And we can start to compare these. But I also want to insert a chart for KHC. So, Ford, I think I'll just move over here for the moment, and then we can kind of, line these up as they come in. And maybe I just put it like that. And then let's take that and this, right? And then we just do insert a chart, and then we go, boom. Perfect. So here is our KHC chart that we're looking at, right? We can kind of resize it to make that basically like Ford's, and we can call it KHC. It's actually revenue trend, not earnings trend, right? Over here I said earnings trend, which is actually not quite right. So we can switch that revenue, because revenue and earnings are actually technically a different thing. But revenue trend, so we can see this is a little different, right? A little different than Ford's trend, which Ford is basically just gone up the last 5 years. KHC has certainly gone up, but you can see this last year it's come down some, which is kind of interesting to see. Now, I will say the 0 point on this is a little bit different, right? This one didn't go all the way down to zero. So we could make these, the same trend. You know, what would be interesting too is we could just do this and do insert, and we could do another chart, right? And this is sort of that comparative analysis is where we can do this and say, hey, that's kind of interesting, right? So, right, comparatively, right, Ford is basically going up, KHC is basically staying flat. But if you expand that, right, KHC has moved up and down a little bit, but the difference is, we're going from $26,042 to 26,000 or 26,640,000. So, I mean, smaller variations for sure, but still interesting to see comparatively, right? We can see, okay, KHC, yeah, their earnings are going up and down a little bit, but basically they've stayed flat, where Ford has in general gone up a little bit. So that's kind of interesting to see. I think we'll want to do another one of these as we kind of get through it and look at the rest of them, but kind of interesting. So, all right, KHC is basically making the same amount of money. It did drop down a little, in the last 12 months compared to prior to that, but not doing too bad, basically staying flat. So yeah, kind of interesting to see. So the question here is, okay, is KHC in a good position to buy? Well, we see, okay, they've got a good market cap, so a lot of value in the company. Again, a lot of value in the company, less on the EV than on Ford, right? But still, in terms of trying to buy in, right, I don't think they're going bankrupt. Beta, we're saying that they're 0.52. So, if the overall market moves 1%, we expect KHC to move a 0.5%. That's kind of interesting, right? Yeah, I mean, that's definitely interesting. PE ratio, right? Price to earnings is higher, right? So now we've got a higher price to earnings ratio. So we're paying more for every dollar of income, both now and in the expected next 5 years, right? And that's what this PEG ratio looks like, the next 5 years worth of growth. We're still paying about 1. So, not as good as an investment as what Ford looks like in terms of what we're getting for each dollar we buy. Now, their earnings per share is about $1.56 per share, which is higher than Ford's, right? That's almost 50, actually, it's over a 50% increase from what Ford is earning per share of stock, which is interesting, right? So there's more earnings for each share. A little bit lower dividend yield, right? So we're only making 4.46% versus the 5.62%, which is, yeah, okay, that's fine, but still over 4% is a good enough number for me to consider it, right? In terms of looking at getting some dividend income, that's not terrible. EBITDA, right? Lower EBITDA by like half. Actually, it's less than half what Ford's is. So again, smaller earnings, but that makes sense when we look at revenues. Basically, what would that end up being? I think that would be about $1 billion. Right, because what I'm thinking is these numbers are in thousands again, also, right, from our finance sheet, right? These are all revenue totals in thousands. So if we want to find real revenue, right, we would take this number. So let's just take it down here and let's do, right, this number times 1,000. And we can comma that, right, make that a comma separated value. And we say, okay, so we've got hundreds, thousands, millions. So 26 million versus, right, this one's got an extra versus 126, a billion, I'm sorry, not million. 126 billion versus 26 billion in terms of revenue, right? So that's kind of interesting to see, right? A lot less revenue than Ford is making here on KHC. And you're getting less value for what you pay for, but they are making a good earnings per share and still have what I would consider a good dividend. They're still plenty big as far as the company goes. And their revenues have dropped a little bit, but right, again, when you look at it on scale compared to what Ford is doing, the revenues have dropped some, but not significantly. So I would say, KHC, it looks okay. It doesn't look like my favorite thing ever in terms of looking at potential investments. But I do think that, for the sake of the example, I'm willing to buy 1 share. I will say, though, right, Ford is a better looking investment to me on really everything except the earnings per share. I like Ford better. right? Earnings per share on Ford is lower, but basically everything else looks better for Ford. Market cap too, KHC is currently valued just a little bit higher at the current market price. I say a little bit, that's still $1 billion, but comparatively, yeah, that's not terribly significant. So I think what I'll do is I'll go ahead and buy 1 share of KHC. Because again, overall, it looks okay, right? Doesn't look like my favorite, but it doesn't look terrible. And the whole point of this is really to do an example. So I think I'll go ahead and go back to, instead of a weekly chart, a daily chart. And I'll say, you know what, I'll buy 1 share. Now, again, this is an investment example. I'm not really trying to trade with this or anything. This is basically just buy and hold long term for the sake of investing. So I'll go ahead and I'm going to buy just 1 share, right? And it's at 36.07. So I'll just do a buy order, and instead of 100 shares, right? I don't want 100 shares. I don't like it as much as Ford. So if I'm going to invest more money, then I would like to be investing that comparatively, at least in Ford. And I'll set it at a limit order at the mid price to natural price, right? It's a 1 cent bid ask spread on the stock, so that's fine. And for the day, good, confirm and send, and we can see buy 1 to open. It'll cost me $36.07. That is perfectly acceptable. It's on the right account. Good. Boom. And now I've got 1 share of KHC. So I'm going to do is mark my row. Perfect. And then, right, we can see now I've got some in Ford and I've got some in KHC. And you can see now I've got my 1 share at 36.07. So kind of cool to see. That's pretty neat, right? So yeah, kind of cool. Again, it's not as good a look as Ford, I don't think. But for the purpose of the example here, it's an okay looking stock, right? It doesn't look bad. I do like that 40-cent dividend, right? I mean, that's still a pretty good dividend yield at 4.46%. Still not bad, right? A little over 1% lower than we see on Ford here. So, overall looking at, okay, what do I want to buy next? If I'm looking between the two, Ford is a better look, right? So I think there's going to be something to be said for that. And then the Ford's got the revenues going up. KHC's not got revenues going up, which really means KHC is not selling comparatively as well as Ford is selling, year over year. But yeah, I mean, super interesting. So hopefully that's helpful, right? Hopefully you guys can kind of see how this works and start to see how the comparative side of it makes some sense as we're looking at these numbers. So yeah, I mean, kind of cool. Oh, kind of cool to see. So we'll be back on Wednesday. We're going to be talking about our next stock, which is Verizon, right? Verizon Wireless, phone companies. You can see I've traded this a couple times here. So yeah, I mean, kind of interesting, but this one basically rolling, at least in the short term. So coming back Wednesday to look at that. So stay tuned and we will see you Wednesday. Until then, happy trading. And as always, happy investing.